All right, let's jump into it. Where we at? 3:58. So on the Saturday, 8th of November. So first week of the month down, and yeah, still no government, U.S. government back. So we're sort of getting dribs and drabs of data and that, but obviously no government stuff, only the sort of private stuff. And just to sort of recap the week a little bit, I suppose we may as well start from the front here, but we had obviously RBA held rates. This did not do anything for Aussie throughout the week, and I'll get to the charts with this at the moment because that was actually quite a good trade from CPI above 66. I think we're about 100 130, 140 points or so, 150 points maybe, dropped since CPI. And obviously, typically you would think with these sort of rate sort of decisions where they're sort of going to hold, particularly while people are still talking about the Fed, which is, the direct comparison with the Aussie dollar, that it may have sort of firmed up there a little bit. But and also Bullock came out and she sounded a little bit more hawkish with her outlook. Like she didn't sound super confident with stuff, but again, this is the thing sort of with Aussie and that it's because it's not just and like with a lot of these currencies, it's not just the rates that are going to sort of play the position sort of like play place the strength with the currency. If I can get my words out. It's obviously sort of particularly with Aussie, it's a risk factor, it's a risk proxy, and things didn't sound overly sort of rosy over there, and so obviously sort of like we sort of saw the Aussie take a little bit of a hit. It's coming into a bit of a sort of tough time because look, inflation is obviously sort of jumping up quite high. The jobs market did have a bit of a jump. I think it went 4.2 to 4.5 last print that we had. And so it's not sort of like it's certainly not as bad as some of the other economies, but in the context of Australia, it's not great. And obviously it's moving in the wrong direction. So it puts them in a very sort of precarious kind of position, not really so much of like fully stagflation, but it's moving towards that sort of point where you need to cut rates to sort of help the job market, but you've also got inflation coming up at the same time, so you can't really sort of cut into the inflation sort of moving at the speed that it is with the sort of three above it. So anyway, long story short, Aussie took a bath despite them sort of holding the rates there. Um, Bits and pieces of data we got out of the US and that we got some bits and pieces here. All right, sort of back at it there. So yeah, basically, yeah, we had BOE sort of had their rate decision this week as well. It's 4%. Is look, it's nothing direct of what I sort of trade, so I'm not overly interested with it. But it's just good to see what these other sort of major sort of central banks are doing with their sort of rates at the moment. And so you're getting a bit of a mix of sort of things at the moment. Obviously, we got the Fed is the big sort of mover, but without the sort of government data sort of coming out, I think the market's really in a little bit of a sort of precarious kind of position as to sort of what the move is going to be next. Like we had ADP out, so as I said, we got little dribs and drabs of bits of data in that. ADP is basically it makes up a portion of NFP, so it's the private sector, and that's why we got the numbers there. That presumably, well, not presumably, it was better than expected, and obviously from last month where we had a negative read, back up into sort of positive numbers there. So US dollar sort of positive with this. We had ISM, which was from the managers. I think it's 300 company. Yeah, survey of 300 purchasing managers. Basically, levels of business conditions, yada yada, this kind of stuff. One of those ones where 50 is the baseline, further away from 50 is expansion. Obviously, sort of the numbers sort of coming down underneath, obviously, is sort of contraction. So 50 previously, expected a little bit of a step up and obviously came in at 52.4. So again, another dollar positive kind of bit of data there. So even though sort of we're not actually getting all the sort of bits of data, we're not getting like, NFP is obviously the main one that we should have had this because it was the first Friday of the month. But we are sort of seeing little bits where the economy over there isn't really too bad. I mean, you're still getting sort of, like I said, as we sort of saw with the ISM numbers as in a positive. We got ADP, which makes up a portion of the NFP as a positive. The correlation between ADP and NFP, people sort of like to sort of say that you can use it as a bit of a sort of indicator, but in my experience, it's just sort of it's hit and miss. Like you could have as positive ADP and then negative NFP. So in theory, it makes up a portion of it, but in reality, I find it's not a really good sort of precursor to what we're actually going to get from NFP. So apparently there was something on Friday. I'm not 100% sure on this that the uh, shutdown. They were having a vote. I heard. I don't actually have any articles on that to sort of reference off it. But basically, having a sort of vote sort of as to sort of bringing the government back. So I think 37, 38 days or something at the moment. So it's longest on record, which the last one was obviously 2018, which is also Trump. But I think it sort of paints a picture of sort of like the Democrats sort of being, without sort of getting too political on it, but I think the Democrats are sort of like, if we don't get what we want, we're going to try and sort of run you into the ground as much as we can. And last time it sort of had that effect. Like you saw the approval ratings of Trump sort of drop through this period, through that period. Through this period, though, we're actually seeing inverse to that. So we're actually seeing the approval ratings actually not really, not like, okay, they're going up, but they're certainly not being hurt by it. So which means basically people aren't necessarily attributing blame to Trump and the sort of that administration for this thing continuing and going on. So it's a very sort of odd situation. It's actually almost been a little bit. I was saying to somebody the other day, it's almost been a little bit sort of a nice relief not to have a bit of data out for a bit because it's a lot of these bits of data, like you're just basically plugging them into like the overall picture. Are the, in this case, the Fed going to be cutting? Are they going to be holding? Is it sort of a bit more of a hawkish or a bit more of a dovish kind of sort of bit of data? And, a lot of these bits of data are just well, sort of kind of the market knee-jerk reaction. So you be in a nice position, if things are going well. Oh, here we go. We got something that seems a little bit off. Positions get blown out, and then sort of back, within a couple of hours, depending on which bit of data it is. Obviously, they're not all weighted the same. You have different tiers of data, but if the retail sales come out, okay, yes, that it holds a bit of weight in there, but it's not like the same weight as CPI or NFP. So anyway, that was about it for what we had last week. Coming up this week, what we got? Typical sort of Mondays and that. Mondays are pretty quiet, sort of on the data front. We've got consumer sentiment on Tuesday for the Aussie, negative 3.5% previously. Haven't got actually any sort of forecasts for that, which is interesting. I'm not quite sure if we normally do with that. Claremont count change from for GBP, which is basically unemployment numbers. Unemployment, yeah, they're claiming unemployment benefits. So they've all just got slightly different names for it all. Bank holiday in Japan, bank holiday in the US on the Wednesday for Veterans Day. Okay, interesting, interesting. Um, Pretty quiet actually, sort of through the week. So moving on to Thursday, got a couple of Fed speakers. There's sort of Williams and Paulson, I don't know this one and that, but basically all I really sort of pick up the names of Bowman and Waller because whenever they speak, they seem to hold some weight because they were the original dissenters. Also Mirren, who was the sort of a Trump appointee. They're sort of more people that could kind of not crash the US dollar, but certainly, they're very sort of more dovish approach, like particularly Mirren. Mirren's like, 50 base point cut, you need to do it sooner rather than later. And look, there is some sort of credit to what they are saying with these things because, without the data, you can't really make a decision as to what the current state is. We can go off what we had previously with the numbers, but not, as it is right now, just because we don't have the data. But the thing is, if you wait to get the data and then, the jobs market's absolutely screwed, well, you're kind of like a little bit behind the ball there. And this is the point of these people, like, they're supposed to preempt these things, not sort of wait till it fully blows up and breaks and then go, oh, okay, now we're going to cut. So, there is some sort of credit to what they're saying. Probably not the 50 base point cut. I don't think that's probably a little bit extreme. But given the fact that, as you saw, the rest of the data that we are actually getting isn't too bad. So if that was bad, if the data we were getting was bad, and then we go off the last sort of previous government data we had was not particularly good for the jobs market and everything, then yeah, okay, a bigger cut could be warranted. But at the moment, not so much. So yeah, Monday to Wednesday pretty quiet. We got unemployment change coming out on for Australia on Thursday, 11:30 there. So this is what I was talking about before. The unemployment rate down from 4.5% to 4.4%, and of course they spam there 20,000 every month. It's got to be 20,000. Look at this, one, two, three. That's the last 5, 6. I suppose you had a couple in the 30s here, but when they put it in the 30s came in at negative 52. So yeah, it's a bit of a sort of ongoing sort of joke with that one, but they just sort of spam 20,000 every week, every month. Sorry, but anyway, regardless of that, the drop in the sort of unemployment rate is something that could be a little bit better for the Aussie in that because the thing is obviously the situation they're in at the moment, which I was sort of touching on earlier, which was the basically a sort of it's not fully in the point of stagflation, but it's pretty much into that point at the moment because you've got inflation moving up, but you've also got unemployment moving up. The way that the central bank will move and sort of react with each of these are basically the two mandates. And if inflation's higher, well, the way that they would sort of move towards is a more dovish approach, a sort of more hawkish approach, keep the rates higher for longer. At the moment, the talk of that is potentially holding rates for the RBA till mid next year. And if they don't get on top of these numbers, then there is a potential that the hike could be the next direction that they go. But anyway, the point is at the moment, you've got inflation going up, so they would be more of a hawkish stance to sort of combat the inflation, but the unemployment is also going so the unemployment rate is also going up. So that's something that would require a bit more of a sort of dovish and a bit of a loosening of the monetary policy. But you can't cut rates into a rising inflation. You got to pick your camp. You got to pick your battle. Which one do you really want to attack? And in my opinion, I would probably say that they would attack inflation first. Um, it's a tough one though, because it's like if you haven't got a job, plus the inflation goes up, well, you're twice as screwed there. So yeah, look, it's a tough situation. But Bullock, if you listen to what she said in the last press conferences, she thinks that this is going to be a bit of a blip, this unemployment rate sort of moving up. So if we do see these numbers start to come down a little bit, so if we see employment numbers going up, unemployment rate going down, that's going to be something that could probably sort of give the Aussie a little bit of a lift. So something to keep an eye on there. But as always, I to say with this stuff, it really takes the back seat of what's happening with the US. CPI coming out. I think we just had CPI, didn't we? I thought that was the big thing that we had like sort of 2 weeks ago. Um, but again, these ones tentative because we're not getting the numbers. Maybe they were yearly numbers that we had more recently. But apart from that, pretty quiet week actually. And then of course to finish off, a couple of bits of data if they do come. Retail sales PPI. That's producer price index. So think about it basically sort of the wholesaler. So sort of before it gets to the consumer, CPI, you have PPI. So if the wholesaler is paying more, if they're seeing a level of inflation, the idea is that they're further up the trough kind of thing, and then it'll sort of then trickle down to CPI. So ones to look out for, but I'll cover those closer to them through the week because at the moment, of course, the government's still shut down, so it's still tentative. All right. Anyway, flick onto the charts. So I'll start off with DXY here because this has actually sort of been trading beautifully. Like and I've covered this a couple of times with it all. Like when things perfectly sort of respect the chart, um, there's structure to it. And I've covered this a couple of times that it's not so much this just sort of, emotionally driven moves where, people are sort of, oh, let's get in at all accounts or let's get out at all accounts. And that's when you get those capitulations, you get those large, fast moves. And you can have a sort of support, you can have, your resistance levels, whatever, and it'll just blow through them and disregard them. But for the last couple of weeks, this has just been playing beautifully. Look, we had the inverted head and shoulders, pretty much completed the move there. Pull back down, break, retest, and these sort of things are coming within a point. I mean, maybe it's a little bit of a pat on the back to me for the levels that I'm putting in, but they are reacting where they need to be reacting, and you've seen that second effort push through. Consolidation out the top side of the resistance, and this is what I sort of say that sort of consolidation favors continuation. And it's just been playing beautifully. This was the target up around this 100. Um, this was where we started to see things turn. And I sort of put this up the other day, and I sort of put a post on X and say that, because negative divergence is like, my bread and butter. And particularly when you can do a negative divergence into a sort of resistance, your hit rate is very high with it all. And that's exactly what we're seeing here. There was a second push through this. So I think I sort of called it a little bit earlier at just, where were we? Probably around this point here. Actually, it was this point here because obviously I've got this little red line marked through it, but the second one is what actually clenched it here. And we saw a little bit of a gap down, and that's fine. And the way that the gap, I mean, look, everyone knows that gaps are kind of like, magnets. Okay, that's price is going to go there. Yeah, that's fine. The way DXY specifically works with its gaps, though, you'll either close it straight away. If you don't close it straight away, I'm talking like within the first hour, you may see it close. Well, most likely you'll see it close in Euro session of that same day. If it doesn't close in Euro session, then it's got potential to stay open for, it could be a couple of weeks. So this is exactly what we're seeing. Sort of it tried to come through here, and obviously it's just dribble, 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 dribble down and that. And so the targets that I sort of put out on this thing were 99.7 and then 99.4, both of which sparked decent reactions. As you can see, the first time it came into 99.7, this sort of daily support that we had through here, big reaction up here. Metals got absolutely hammered through this one little push up through here. I think we dropped like $100 or something on gold. But the move wasn't played out, and this is what I'm trying to sort of ascertain at the moment with these negative divergences between 13 and 20 candles. And this is on the 4-hour. So as you can see, we've just come into the 13th candle now, starting from the first actual candle that put in the negative divergence. So this is why sort of when we were here and we were coming off the support and we got a nice bounce, and this is a second bounce, this is Friday session through here, I was like, no, look, I don't think this move has played out. And as you can see, came up, clipped that sort of 4-hour resistance, and then just got slammed again. So a little bit of stronger data into the end of the week, of course. But you got to sort of think like, this, I don't know if it's necessarily going to V-shape recovery, but I would be saying we're probably getting close to the finish of this pullback. We're coming pretty close to this sort of rising support here. We're 13 candles in. I'm giving it 13 to 20. Look, I did it with the GSR, like the gold silver ratio the other day, and that was 22. But we'll see. I mean, not everything moves exactly the same in that, and this is just about getting a pretty good sort of average of it all. But what I'm sort of saying is that we are potentially going to see this base through this point here, and then start to see this leg coming up here. And this is what I always sort of say when I sort of repeat myself over and over, but that's kind of what trading is. You got the leg up into resistance. That's fine. We've had that pull back. That's fine. Into a support, previous resistance. So where we had resistance here, buyers have stepped in. And this is why we had the target down over at 99.4. So basically, we've got to get this third leg here. Drag this one out. This is going to be the tell, this one here. Look, I do think we're probably going to go higher. I think sort of we are going to see a continued push to the top side into the end of the year with the US dollar. But of course, you've got to wait to have that sort of confirmed. But the point that I was saying before is that we left that gap open. That's fine. We've come back. We're finding support. We haven't sort of confirmed the support yet. But obviously, 2 4-hour taps into there, good rejections into a sort of an area where we expect the buyers to be. So there's a couple of things working for it there. Consolidate this area. First move will be to sort of come back and close that gap. And this is what I was saying. If you don't close it straight away, don't close it in Europe, that Euro session that day, it's going to be open for a couple of days. And that's what we've seen. And I would say probably maybe mid next week, depending, as I said, I do price levels, not time levels, but that's kind of the time that I'm sort of basing it on. Probably a little bit of consolidation into the start of the week. And then once we start to take out these levels, particularly once we get above 99.8, I would say that's your move up there. And this is what's going to be the tell, because this is the one that's going to give us either a lower high, when we could say, if that does come, well, okay, lower high, then we're targeting the lows back at that sort of support where we have rallied from. It's going to give us a double top where we could potentially be starting to see a bit of a range. Could also lead to downside. Or we could see it move through. And it's that second effort. That's what I always say, like the footy. It's always about the second effort. And if the second effort pushes through, we've got resistance up at 153, but I think you're pretty much sort of confirming that we are continuing up a little bit higher. And as you can see, this has kind of been my sort of thesis for the last couple of weeks, actually, for the last couple of, probably the last couple of months. I've been a little bit early on the trade, but that is the idea for it sort of moving through there. So yeah, consolidation early in the week, get this negative divergence move to sort of play out, and I would say buck above sort of 99.7, be interesting, but confirmed above 99.8. It's a little higher there. All right, for the below, we've got gold. This is one that has been absolutely just. I need to clean these charts up a bit, but this has actually played very well. So again, with this sort of move, if you have, I can't remember what day it was, maybe Wednesday or the Thursday we did that analysis, but that little spike up that I referenced a second ago on DXY, this is the reaction of gold, and well, we dropped 4,000 down to 39.30, $70 in one candle. So what I sort of feel with this is that potentially that's sort of foreshadowing how the market feels about it when the dollar catches a bid. Now, typically they've got a sort of inverse relationship in that. So, I use a 90 to 10 kind of ratio with it all. 90% of the time they'll run inverse to each other, 10% of the time they'll run concurrently, and they'll sort of both be moving up, both be moving down. When we saw the dollar just catch a bit of a bid, now remember it didn't sort of fly back up, it didn't make new highs or anything like this, but we saw it come off that first level that we marked out, that was 99.7. It bounced a little bit, didn't even go back up to its highs, and the market just said, bang, I'm out, boom, dumped gold, $70. Yes, it recovered afterwards, and I do still think that we have some short-term upside to come. We are starting to make a little bit of a range through here, bit of a double bottom, which would give us that measured move back up to around 41.30. But I do think once the dollar finds its feet and does make that new high and breaks through to the top, I wouldn't want to be long metals, put it that way. So I do think while the dollar sort of stuffs around and consolidates down the bottom there a little bit more, that could give us a more short-term upside in metals. But I do believe that this is the kind of move that we're looking for. A move back up to around maybe completely, seems kind of ambitious here at the moment, but these things obviously can move quite quickly when they want to. But up around that sort of 41.40. I did notice this actually, despite this chart being a little bit messy with it all. Yeah, 40.98 is the body fill of the weekly. So you can't really see this because as you can see, this is on the weekly, which is obviously a bigger time frame than I normally sort of reference, but this is a doji. So obviously, think about indecision. Selling down, bought up, sold down, and pretty much closed the week pretty much where it opened. Now, these things are generally can be a bit of a reversal. You take out the weekly high, so above 40.30, you probably look for that body fill as your first target, 40.94, and then see what the market does around there. As I said, we've got a bit of a sort of lower time frame, daily sort of resistance up around that 41.40, but I would say between 40.96 and 40.40, we're going to see the sellers start to push back in here again a little bit. I was talking to a mate the other day, actually, sort of when, just before the Friday session here, maybe like just as Friday session opened or something like this, but had this little falling resistance here, which looks good on the 4 hour if you have a look. There's a nice sort of, as I see referenced here, boom, 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 break, back test, and pushed up here. Technically made a new high, but that was into the end of the week, and I kind of disregard the last candle or two of the week. So, but the point is, if you look on the daily, this candle here, if you looked at it just by itself, kind of thing, big top wick, closed bearish, it looks like a reversal kind of candle. But I was saying to him, so like, I don't know if it's a level of sort of like OCD or something, but I got to see the candle's got to be in the right place. So although that is technically kind of like, okay, it's moved up, sell, it's moved back down, close with a bearish thing, it would look reversal. It doesn't look right in that place. If it was at the top of a trend, I would have more faith in that and being a reversal. And so I bought gold. Actually, I did quite well through that Friday session because I kept buying gold. And I bought it, I actually got sort of a pullback entry. So I got out at like, I don't know, 40.10, I think it was, on the Thursday. Chucked some low ball orders in, got those filled because we had that big dump down, and then started buying again on open. And it was pretty much a nice little one-way trade with that. Like we had a little bit of stuffing around, but where's the Friday session? So that's the Friday. So yeah, that's where we opened there. And as you can see, it was pretty much like we had a bit of a pullback at the end of what was this? Around the start of US sessions, but it was a pretty good one-way trade. Anyway, what we've sort of got from this was sort of confirmed that obviously this is where the sellers are sitting, 40.30. You can see it on a bunch of different time frames. That's the level to beat. Get above 40.30. It's pretty clear up there, and as I said, we're looking up around a move towards sort of 4100. Move along. We've got silver. Silver, it's okay. It's recovered a little bit. I don't particularly like this structure, but I did put it in there just for the sake of it, just because I thought this seems a bit more of a realistic target should we break up a bit higher. Now, I've heard a lot of sort of inverted head and shoulder calls and all this kind of thing, and I mapped it out here and I said, look, if this is an inverted head and shoulders, this is where your measured move would be, 52.70. It's plausible. It's around the 78% retracement. It's got a horizontal there. It's plausible. I don't think it's going to happen, but these things obviously sort of can happen with it all. But I do think this is probably a bit more of a sort of plausible idea. And the unpacking of this is the psychology of this, in my opinion anyway, would be that this is your previous all-time highs, 49.80. This is 50 years. This level has been the highs, the peak. This whole big move up over here where we went up to 54, 55 bucks or so. This, as it stands at the moment, is what you would consider a fake breakout. Here's your big long-term resistance. Price moved above it. Price has come back down underneath it. So as it stands at the moment, it's a fake breakout. My feeling is that sort of what you'll do is you'll get back above it. This drags in the silver crowd. The silver crowd are lunatics. They're kind of like the Bitcoin crowd. Like they're all like, oh yeah, man, it's going to 100. It's going to 70 bucks by Christmas. I'm like, dude, like, look, I do think it'll probably get there, but it's not going to go 30 bucks in 6 weeks. Like it's not. Anyway, we'll see how we go. But the point is that I think once you get above all-time highs, I think you're going to get a large influx of people going, hold on, wait, it was just a back test. It's not a fake breakout. That's going to see, there'll be a bunch of stops here where I've got this thing marked up here. I think there'll be a bunch of stops here. I think this is going to be a big liquidity grab. I think it's going to be a thing to sort of drag in a bunch of these people that are sort of going to be going, okay, well, you know what, it's not a fake breakout. Here we go, we're moving up. And of course, if you think about this again, this is the big move. Here we go, we're going to move up, resistance, back, we found support. This is the leg that we need to have. This I don't feel has achieved that yet. So what I'm looking for is a continued break move up over here. I think it'll resemble something of a short squeeze. So those sort of moments where it's pretty much just one-way traffic. It's just straight up, no chance for people to get on, no chance for people to get off. It's just up, 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 up. And people are going to be going, wow, look at this. It's going up. It's going up. It's going straight. It's breaking out. It's not a fake breakout. That's going to drag in so much. Like if you look on, like sort of, take the temperature on Twitter of all these sort of people, they're just lunatics. And this is why I say that it's like the Bitcoin crowd, because they don't understand that just because it's going up, 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 it can actually still come back down. Look, Bitcoin obviously did recover, but if you think about it in 2020, every second person was a trader. I'd speak to people I haven't spoken to in years, and they're like, yeah, man, I'm a trader now. Needless to say, none of them trade anymore because when it crashed, they didn't know what to do. And I think that's the kind of money and capital that the market's going to try and take away before it does do the break. So I do think that we do have higher numbers to come, but I do think, you got to flush out that lot of capital first. And I think it's sort of like that'll happen by a drive up, get people super pumped about it, let them pump a whole bunch more cash into it, use that extra liquidity to sell into, and that's when we'll see this bigger move come back down. And then, of course, we're targeting 45. Look, who knows how low it could come? I mean, obviously, then we'll have to sort of play it out. But if this does play out in this manner, that'll give you a higher low. What you would potentially do is you take this high, you take that high, just wherever this may happen to be. You drag this across the bottom here, you drag that across the bottom there, and as you can see, we start to build the structure of a a sort of a downtrend channel. And so if this were to come out here, this is a bit of forethought with it all, but should this come through this angle here, that's the kind of structure that you would look. And then, of course, that's your breakout line for the next move. But what you could potentially be looking for is a move back down to, say, 42, 43, which I've been sort of touting. Obviously, that's where my next price target is, down over here, around that sort of 43, 40. And then underneath that, you're looking back down at 41. And if you think about it, 41, I mean, that's only taking you back to September, mid-September. So I just think there's a lot of sort of money that could be wiped out with the market first before it does see these bigger moves. But 2026 seems to be the year that people sort of touting the higher numbers, particularly for silver. All right, moving on. Sort of got Aussie, and this is what I was talking about with Aussie. So if you get onto the daily time frame, you can see with Aussie, it's actually holding this level quite well. This was where it sort of consolidated for about a week or so before we had that big gap up breakout kind of thing. And this is where CPI came out. And as I said, we just tipped above 66 and it's just been bang straight down since. So what are we looking at here? This is 2.5%, which, not to keep talking about Bitcoin people, but, it's because, as I said, like a couple of years ago when that guy was like, oh, yeah, not that guy, we're just one of these guys that was like, oh, I'm a trader now. I put up a chart and I said, yeah, I've been waiting for this move, and it was like 2% or something, whatever. If it was Aussie, it's like, yeah, man, I do like 20% in a day. And I'm like, okay, cool, good on you, mate. Anyway, whatever. 2.5% is a big move in FX, and you can see that. Obviously, it's just pretty much one-way straight traffic coming down through here. So, look, the point is at the moment is it's sort of finding support along this sort of line here. If we sort of look at that data that we had at the start of, or coming up this week, the start of this video, should that come out with higher employment numbers, lower unemployment percentage, plus we see the US dollar still on the back foot, that's when we could start to see a bit of a move up. I don't think it's going to be enough to break, sort of turn around the Aussie, but there is potential for something along these lines to sort of fill out this structure a little bit more. But as I've said a couple of times as well, it doesn't really matter what data we have. If the market consensus is to buy the US dollar, then we can have better local data, we can have better unemployment and employment numbers, whatever. We will still take a backseat. They're not equally weighted currencies in the sense of, you know what I mean? The market, if the market wants to buy US dollar, and this is dictated by obviously the DXY, so you can see because obviously Aussie isn't part of DXY, but that's a barometer for the market sort of sentiment towards US dollar. If we see that happen, if we see equity markets roll over, because Aussie's a risk proxy as well, if we see that sort of fear in the market, Aussie, I think look, honestly, I still think we have 62 cents on the cards, either into the end of the year or early next year. So I'm still reluctant to buy Aussie. It's been very resilient, I suppose, through this sort of move back up here, but I've referenced it a couple of times in regards of sort of like a couple of its peers, like against the euro coming back off April lows, 161%. Aussie at the best did 78%, which is still a decent bounce back, but it goes to show that sort of like, given the choice around the market, people will flood back into the euro. They won't flood into the Aussie. And that's fine. It's held it up and kept it vaguely buoyant. But should the market sentiment swap and change, and they weren't buying it when the US dollar was weak, well, they weren't overly buying it when the US dollar was weak, and then the market starts to buy the US dollar, well, they're still not buying the Aussie dollar, which gives it sort of a double hit, a double whammy kind of thing to the downside. So that's a bit of sort of broader view with it all there, but I think sort of certainly a close underneath 64.70. I like a clear close underneath this sort of support, which is trying to hold at the moment. Opens the door to 64.20. 64.20 is going to be the major breakout. So I imagine even if it comes down here, we're going to get a reaction. We're going to get a buying spree. We're going to get some profit taking, some buyers sort of step back in at that level. But should that break, again, I wouldn't want to be long Aussie in that sort of a scenario. All right, finish off quickly. Just got copper. So copper last week, as I said, I've steered clear of this for a little bit, but I still chart it because it's a good proxy with it all. We are seeing this move quite well as a structural thing, as we can see. Rising support through here. Had this little horizontal, step back into it, and then bang, rejected down where it needed to. So underneath 497, 470 is the next sort of target that I'm sort of looking at. And then just had to play it by ear from there. But as I said, those moves at the start of the year or sort of midway through this year have kind of really just made me hold my horses on actually trading copper. We're going to do 20% in 5 minutes. That's the kind of stuff that'll just blow your account. Even if you have stops in, the slippage with that kind of stuff would be very costly. And finally, the yuan. So yuan's holding, or yuan, yeah, yuan, holding the weekly supports here. We are just pretty much firming up into a range. So this is my still outlook here that we probably are going to see US dollar strength across the board, which obviously is going to see weaker yuan. Secondary to that would be a breakdown under here. Now, just again with this more as a proxy, a weaker yuan is going to be weaker for the Aussie dollar as well. It's another thing that drives it. So you've got the rates that drive it. You've got the sort of the risk, the sentiment across the market that drives it. US dollar drives it, but obviously what's happening in China and the stronger the yuan. Kind of think about it. There's sort of like, because they're the biggest purchaser, the stronger the yuan, the more sort of power or energy that they've got to buy our stuff, or buy our products, mining or iron ore, all this kind of stuff, and the inverse of that as well. So you hear lots of stuff about, I mean, it's a bit hard to really know what's going on with China because in some regards they sound like they're falling apart. In some regards they sound like the world at the forefront of a whole bunch of sort of stuff. So I think it's just because it's such a large country. You know what I mean? It probably is actually true in both regards. They probably do have people that are really at the forefront. They probably also have people that are very much, third world country kind of sort of stuff with it all. But anyway, regardless of all that, weekly support, double bottom. We've got a high. That's the breakout above sort of 7153. Next target 719. That's going to see Aussie peel off a little bit should this break. And I think these things will probably come around the same time. So you'll see DXY breaking higher. You'll see Aussie dollar breaking down below 64.2. And you'll probably see gold come off in this sort of scenario here as well. So I think gold sort of like has really benefited a little bit more from the stronger yuan as well, with China supposedly being one of the bigger buyers. But I did see some data just lastly the other day that China's actually dropped off a little bit. They were big buyers in December when we had that sort of drop down there, which at the time seemed tiny, 1,500, no, was it about 2,600? I think it was at the time, 2,900, something like that. I don't know, $2,000 ago on gold. Anyway, they were big buyers there, but they've been slowly reducing. But all the headlines say that, oh, China's the big buyer, they're the big buyer, but the actual data doesn't support that. So anyway, cool. So we'll see how we go. But yeah, sort of quieter for the start of the week, but basically looking for some US dollar strength coming into the end of the week. All right, that's it from me.